Hello and welcome along to another edition of our monthly Market Watch. In this video we're going to take a quick look at the markets we focused on last month and how they played out, and then of course look ahead to what we can be expecting through the month of November. Last month our main markets, our theme was to look at for euro weakness, equity strength, particularly in the S&P500, and then potential crude and energy sector generally weakness. So we take a look at the euro first. Take a look at the euro. We had said we were looking for the euro to roll over and push back down and possibly into around this 114 area. And the main reason for this was the speculative buying that we'd been seeing actually starting to roll over. The buying interest in this in the euro really getting weaker. That has continued. You see the long position still unraveling, and we see the euro heading lower. So that's playing out as we expect. So that we'll see potentially going into next month around the end of November. We may be buyers in this, but at the moment we're staying short. The other market was the S&P 500, and we were bullish equities and said to stay long equities, and that's what we've seen. Definitely seen the US market performing well, actually right across Europe. And generally, we're in a nice period for the equities coming through from October through the end of the year. Is a nice time for the equities. So our view is still to stay long. And then our last market was crude, and I'm going to take a look at a few of the seasonal charts and then come back into crude. But I just want to show you what we can get, what got in those. So what's the theme for this month? Still very much the same as last month. Actually, we're looking for continued weakness across a lot of our major currencies. You can see a lot of negative numbers here showing that generally a lot of our majors are down through the month of November, and particularly you see big numbers like the euro and the Japanese yen in through there, as well as the Swiss franc. So that's much the same as what we've been seeing, and we're looking for a continuation of that. As well as a continuation as in equity strength. November is probably the best month across the board for equities generally. We have the US markets on through here, and you can see big percentage, typical percentage gains and things like the Dow and the Russell looking very strong. So we're looking for continuations in that and looking to buy dips. The other market, as I've mentioned, and we're going to take a look at in detail as well, is the energy sector. Now, we're in this sort of seasonal bearish period for the energy sector, but they've actually been definitely outperforming the seasonal structure. And we're going to take a look at the COT data just to try and explain why that is. And obviously, the COT data is a lot more important to us because it tells us what's happening now, whereas the seasonal perspective is just saying what on average that market can do. But there's some very interesting positioning going on in the energy sector at the moment we're going to take a look at. So let's go over and look at our currencies. Seasonal patterns. First of all, we're saying about weakness to see through there, and you can see Aussie generally weak through November and actually through year end. Pound actually generally quite weak in here as well, but obviously there's a lot of news in focus at the moment with the pound, and we could see a change to this, especially if it's going to be an interest rate rise. Canadian dollars weak through year end, as is the euro for another few weeks, but actually the euro is probably one of the best performers in December. And as I was saying earlier on, if we can get a move back into that 114.50, we could be looking at actually a buy in next month's video on the euro. But the main currency I want to focus on this month is actually the Japanese yen. And the seasonal period we've got in through here is the weakest, and this is generally linked into equity strength. We definitely see a lot of weakness here. It's the weakest period throughout the year for the Japanese yen. So that's one market we're going to take a close look at. Linking into our equities, as I've said, October, November, December, very strong time of the year for the equities, the S&P 500 seasonal patterns. Looking to buy dips, any dips that we can get in the market, looking to buy into them as long as price action remains positive for the trend. And that's the same structure throughout across the indices. So nice move through year end. Typically don't see weakness into the new year. And price action definitely points to more. We will have dips along the way, but no problem with that. And we're looking to buy into those dips. So the other market we're going to be looking at is our energy sector. As I said, heating oil and crude oil typically weak through this time of year. You can see typically crude and heating oil bearish through October, November, but that's not been the case. That has not been the case. We've actually seen both markets perform very well, and that's what I want to focus on. So the two markets we're going to be looking at is crude oil and the Japanese yen, and essentially why I think we're going higher in crude but going lower in the yen. So let's go over and take a look at our COT data just to get into the detail of them. Let's start with the Japanese yen. Japanese yen, we're approaching a nice level of resistance or support in the futures, where there were resistance in dollar yen if you're looking at a dollar yen chart. And it looks like we are getting buying in here on yen, but I actually think we're going to have a breakout of support. So we'll break through the resistance on dollar yen and break through the support in through here. And the reason why is I actually think we're based on the correlations that we see across on the Japanese yen. Things like gold, US treasuries, platinum, a lot of markets I like to trade with correlations. And whilst yen is being bought, I just want to show you something just here. Bear with me, I'm going to bring up gold a second. Just bring up the data on gold. I want to see the index. Just want to have a look at this. Just want to show you. This is the gold data, COT data for gold overlaying with the COT data for the Japanese yen, and you'll actually see typically with the peaks and troughs of both markets, a very strong correlation between them, and the peaks and troughs in both markets tend to occur where the major peaks and troughs tend to occur where they both align, where you see sentiment across multiple markets that are correlated. You tend to have a better, much stronger moves from them. You actually see, so we're getting yen buying in here, but we're not getting gold buying. And another market that I know the yen is very strongly correlated with is the US 10-year. And I'll see, I'll just do the exactly same thing with the US 10-year and overlay that as well. And it shows an even more interesting chart. You see periods here where all three markets align. So the sentiment with markets that are correlated together, those markets that are correlated together, that's whenever you actually see the major peaks and troughs coming in, and it's actually right across the board. If I could show you the data on gold or the US treasuries or the yen or even things like platinum, very strong correlations across those markets. You see when they all combine together, the sentiment really changes across the market as a whole. But if you actually look at the yen at the moment, we're seeing yen buying, but it's the only thing getting bought, which is worrying me, which is why I think we can actually expect to see further weakness in the yen. So you're looking at dollar yen as a resistance level that we're sort of sitting at the moment. I actually think we're going to have a break through that resistance and move higher in dollar yen, which will be a continued weakness in yen futures through here. So that's my view at the moment. I'm not looking to get long on the yen. I'm actually looking for the resistance that we're currently sitting at to break, and it's based off this correlation. So I'm a big fan of trading correlations. I'm not going to go into that in this video. Maybe have a look at how to trade correlations in a later video, but that's my reasoning for yen. The markets that are traded along with yen aren't being bought to the same extent the yen is. So that leads me to think we can actually see further weakness on that. So the other market we'd said last month to focus on was crude oil, and what we were looking for was actual weakness in the energy sector, October through to the end of the year. We were looking for a move higher. We're looking for the market to push up back in towards sort of the $54 mark, which is just up around here. Nice level of resistance just up there. So we were looking for a push higher, and it said to watch for the commercial positions, because obviously they're going to be hedging. The other one's going to be building up the sell positions. I want to see them try to drive the market lower. So we want to see an increase here, and that's what we did see earlier in the month. We're seeing this continue, the short position build up. But you actually look at now, we're only just now approaching that $54 mark. And very interestingly, we have actually seen a drop off, a significant drop off on short positions. So that's the commercial side of the market actually leaving that market, which suggests to me that they believe the market can go higher from here. So the plan had been to monitor commercial short positions as we approach that level to determine if I want to be a seller heading into this, the very seasonal period. But as it stands at the moment, we're not actually seeing selling in here. We're selling the commercial positions that would drive this market lower. They're not there at the moment. They're not at play, so that that weight to drive it lower isn't actually at play. So that's why the seasonal period the seasonal pattern, which we expect to see energy sector moving lower. That's why it's not playing out, because we still see fairly flat positioning with regards to the commercials, and speculators still buying into it. So actually, I think we could have a breakout through the $54 mark. It'll be interesting to monitor price action in around that area, but I think we could have a breakout above the $54 mark and push back up towards 60. I'll of course keep an eye on what positions do here on the commercials short side over the coming weeks, but we need to see a significant increase, which will drive the commercial index much lower. We want to see a push back in towards, definitely towards the zero. You'll see the major peaks and troughs occur, and that's been driven by the positions that we get through here. And at the moment we don't have the positions, we don't have a significant enough short position on the commercials to send crude lower. So if you're looking to possibly get short around 54, I'd be cautious about that at this stage. So that's my view across the markets at the moment. In general, we're looking for continued dollar strength. That'd be general weakness across some of the majority of our major currencies. The only anomaly to that possibly would be the pound, which just seems to be holding its own quite well. Continued equity strength, and actually put a potential continued strength in the energy market as well. Okay guys, that's all for November. I'll see you at the start of December, and we'll see what we can look for as we head into Christmas.